Large, we are recording. All right, we're ready to rock and roll. I have to pull my whiteboard over. So, guys, my name is Jason Ferraro. I am an 8 to 9, I don't even remember if it's 8, 9 years from now, veteran of life insurance and annuity sales. I also have been 25 years in the sales industry. I started my first business when I was 15. It took off like wildfire. By the time I was 17, I was earning six-figure income. And that's part of that story. But in the end of the day, we're here to talk about life insurance. And let me make sure this dude's on. Okay, so since I don't have anybody's face on here, I think everybody's on the phone. Give me a second. I'm going to set this whiteboard up where it usually is, right where everybody can see it. And listen, didn't we get new markers for this thing too? Yes, we did. Right there. One bad part of being super slammed is being well organized. Hey guys, I'm going to tell you one thing right now. If you get to a point where you know that your business, if your life seems out of control, it just means that you're not organized enough. Now, if your dog gets hit by a car, that's a different story. But what we're going to do is I'm going to go over the sales in general. I'm going to start from ground zero, which means I'm going to start from the point of the telephone call to the prospects, and then I'm going to work it into the sale itself on mortgage protection. I think most people were interested in doing mortgage protection. I would assume. I'm not sure, but I would hope so because that's where most of the money is, guys. Now, one of the first things that we need to learn how to do is to keep track of numbers is very important. So whenever you're involved with selling, you want to be able to keep, if you're learning, one of the best ways to learn is to keep track of your numbers and then teach or coach your upline on your numbers, meaning show them what you did for the week. So one of the ways for dialing is very simple, and for sales is how many leads did you buy? Maybe that one's not dark enough for us guys here. Leads. How many leads did you buy? How many dials did you make? How many people did you actually talk to? How many sets did you set? And then we're going to go over some questions too. So you have leads, dials, talk to, sets, and then you have your sits. You have your sales, and then I'm going to add one more in here. I'm going to have some referrals in here. So from the lead point, with the way our leads work, you know, and the way I'm able to get mortgage protected leads, you know, 1 to 30 days old, and there's older ones too, but these are just leads that haven't been used by the proper people who just refuse to get on training weekly and just you know, refuse to inherit some of the things I've done, which is sacrifice this time to make sure that you become a better agent, better rep, and better person just by getting involved in these simple, easy to do strategies and webinars. I mean, it's not rocket science, guys. All it is strategies and techniques that do work. They work, man. So let's go from here. You have your leads, 20 to 60 a week, mixed with anywhere from $6, $11, $15 final expense leads are in there, okay? Also, there are $3 mortgage protection leads in there. Now, if you're buying regular territory, you have $47 mortgage protection leads. This is all great. You can get your 20 to 60 this way somehow. Your dials, if you have 20 leads, obviously, all you're starting brand new, you have 20 leads to dial. That's it. You call them 100, 200 times. You door knock them. You make sure you're leaving stickers on the doors. If you leave a sticker on the door and somebody tries to call you back, don't call them back. Check the number and just go to the house during the time that you know that they're home because they have the sticker on the door. With the in-homes, with the talk tos, just how many people did you talk to? Just keep that number. Let's say that you have 60 leads. You dialed 60 leads. You talked to 50 people. You set 15. You sat with 12. You had 8 sales. And out of that, I'm going to teach you how to get the $100 to $2,000 a month premiums on average. And then your referrals. So if you're open to just giving me a couple minutes to get through this, well, I'm going to teach you how to get these premiums that I'm getting. So not to brag, but month to month for many years, I have at least been at $10,000 for many years. But over the last two years, it's been more like $20,000 to $70,000. So it's more in the ranges now, closer to $50,000 a month. And that's an ALP. And guess what? That's working 3 days a week, by the way. And that's no bullshit. Maybe 4 days a week. The principle of that is getting the higher premiums. Bottom line is when I'm able to pull $500 a month and I put down $500, $1,000, and $1,500 a month premiums in front of the client when other people were putting $30, $50, and $100 premiums. This is where the difference comes. And when you're capable of doing this and knowing why and how you're going to be able to do this, you're going to be more powerful in the house than you could ever dream. I mean, it's extremely powerful, this strategy and tool that you're about to learn. So, Alyssa, did you give me that paperwork I need? Where is it? Did you give it to me? I'm going to give you 2 weapons that you use in the home. This is how I've sold all my business. And if you guys can't see me, by the way, for those that you are on the phone, I have a pen, I have a tab, I have a clipboard with paper on it, and I have a pen in my hand. And I'm literally going to draw out what I do in the home. So the first thing that I ask the individuals, one of the first things, is I tell them this. Hi, Mrs. Jones. My name's Jason. I'm here to help you take care of that mortgage protection deal. I'm at least going to get you some information today that's going to help you be more aware of what's going on in today's world in the state or in your area. It always helps to tell them in your area or in that state because they think they know, but they have no idea. And the biggest rule of thumb is inflation. Keep that word in mind, inflation, for a minute. If you use this word a lot, that means that they need something that performs alongside inflation. Now, a lot of you might be selling term products, and that's cool too. But I'm an index guy, and I try to get high index products, and I do. So I'll use cash value to be able to sell my products a lot. And one of the first pages that I have, one of the first pages that I show in my presentation is the cash value sheet. Because if I'm able to show a $500 a month premium and what the cash value looks like in 10, 20, 30, even 40 years, these people could have $500,000 at this point. And we're talking illustrations at 7.4% on certain carrier that we use. If you don't believe me, I'll talk about it later, more about the products and stuff like that. Let's go over the sale itself in general. Mrs. Jones, as I told you, I'm going to treat this just like you guys came in my office. I'm here to just get some information out to you. I'm here to tell, not sell. So I want to make sure that's real clear. I'm here to tell, not sell, all right? And if you guys aren't taking notes, please take notes. It's very important that you guys get involved with this right now. Let me see what's going on here. Hold on one second, please. I got a lot of people missing from this, and And if anybody has any questions, I'm going to show you where you can type in some questions right here and ask me any question you want at any time, okay? And let me make sure one more place is Facebook that I have to put this on. So we're going to go Facebook Live on this too, babe. Why not, right? Let's all go Facebook Live. But once I show you this sales strategy, it's incredible. Okay, so what we're doing is we are going over mortgage protection, and we're going to teach you guys how to make mortgage protection sales using this whiteboard here. I can't turn this thing around, I guess, or what? I don't know. Hopefully this thing fixes itself. This Facebook Live thing is hold on, guys. Hang in there 1 second, bud. I don't know what's going on with this Facebook thing here, guys. I really don't. It's not looking too good here, is it? If anybody can comment and tell me why we might be having issue. Oh, maybe it's because the clamp is on the volume. Yeah, it doesn't look right. Anybody have any idea why this looks this way? Can you help me out? Because I have no idea why it's looking this way. Look, guys, I have a webinar going on anyway, so I'm going to continue. Anyway, when you're talking about inflation, that's one of the biggest things that I do is talk about inflation. When I'm inside the home, and one of the first questions I ask when I tell them why I'm there, and I'm going to treat this just like we're in my office, Mrs. Jones. Okay, so when I ask this question, I say, hey, you know what, Mr. and Mrs. Jones, just because I need to know this and you two need to know this, out of the two of you, just because the other one's going to be left behind with this, who has the two of the higher Social Securities out of you two? And they usually have no problem in asking, because if you go out and ask personal questions like that immediately, right out of the gates, it's tough for people to answer that question or for you to feel uncomfortable asking that question. So what you want to do is you want to ask certain questions in certain ways. You don't want to just come out and say, you know, what's your Social Security monthly? If you say it that way, you're doomed. So if you ask, who has the two of the higher Social Securities, because that's what the other individual is going to be left with, it makes it much simpler. So I have Mr. Jones here. I have Mrs. Jones here. Mr. Jones is, let's say he's 65. Mrs. Jones is also 65. Mr. Jones, I know his Social Security is $2,000 a month. Mrs. Jones is bringing about $735 a month. Mathematically, I have some great numbers to already work with, okay? Alyssa, if you could give me those sheets out of there, that'd be great, please. Mathematically, I know the difference is because what I found out in the state of Florida by working with enough clients is that they have the issue of waiting 6 to 12 months before this becomes hers. So this 6 to 12 month mark is what she's going to be living off of for the next 6 to 12 months. Now let's push it a year, because you're the worst case scenario guy. You have to be the worst case scenario individual or sales rep, sales professional. So when you go in there, make sure you're the worst case scenario, because that is what you are there for, is to make it the worst case scenario. So if that does happen, that you have the answers and the proper answers for them. Now, I didn't even get into whether they have a 401k, and I'll tell you how this year I'm up to 17 annuities. Last year was 28 annuities. The year before that, it was 16 annuities, and so on. And I'll teach you how to get these annuities out of people in a second. So out of this number, I have a sheet that is in this book somewhere here. My wife, wish was helping me here. There's some paperwork I put together for you guys that I want to get over to everybody that will have the illustrations. There they are right here. So right here, if everybody can see this, this labels everything that everybody's going to have to spend. And on Facebook, I hope everybody can see me clearly, because on me it looks crooked, and on here, I'm hoping everybody can see this. But what this is the bills that the individuals are left with, the significant others, hypothetically the mortgage, life insurance could continue, electric bill, gas bill, car payment, pet, food, eating out, lawn care, the whole 9 yards is in here. So whenever I'm in home, I literally go over this with them. So I know what's coming in and what's going out. So let's get into this retirement plan. Mr. Jones, so I understand this, and I'm trying to help get you the best number possible for the least premium payment. What is Mrs. Jones going to be left with? Do you have a pension? I always start with saying, do you have a pension, or do you have some stock-based product like a 401k? And let's say he says he has a 401k. At this point, I know that he has a stock-based product that can fluctuate in the market. And this is good for me, because I sell those. You know, I have the ability to offer products that can help them participate in the upsides of the market and no longer in the downsides of the market, which is absolutely extraordinary for them in this era of time, because they're 65. They don't have any more time to get money back. So this is important for you guys to grasp this. So at this 401k mark, if he tells me that this 401k is worth $250,000, real quickly on a sheet of paper, I will write down, well, let's separate that number for Mrs. Jones. She has to go 1 year at this. I didn't even ask life insurance yet, too, okay? So I'm going to get into that also. So we have to ask about that. I'm going to get into this. So for the first year so far, worst case scenario, Mr. Jones, she could be left with $735 a month coming in. Okay, she has your 401k. But the 401k over the next 10 years is only, what is that? It's $25,000 for the next 10 years. Let's say hypothetically that happens. Everybody mute yourself out when you're on here, please, so I don't hear any noise, and it just helps everybody else. Hypothetically, that $25,000 in 20 years, what do you think these guys will actually be worth? I mean, it'd be worth 20 grand, maybe less. I don't know, you know, personally, but it's going to be worth less than 25,000. So this is a good point. You're bringing up good points about inflation. Remember, I told you got to remember the word inflation when you're working these final expense, mortgage protection, and annuity presentations at all times. So I'm going to take this board back down, and we're going to start from that point where we just left off. Now we have to ask about, oh, by the way, did you hear how I just said that? Oh, by the way, you know what? Do you guys have life insurance in place now? And I want to compliment them on it. If they do, I want to say, great, wonderful. I said, oh, yeah, we have $10,000 each. Okay, great. You know what? Who's that through? This is through Transamerica. This is through Trans also. Oh, that's wonderful. You know what? How long have you had that? I asked first, how long have you had it? Because it's just simpler than getting into the premium payment first. How long have you guys had that? I'm just kind of wondering. You guys know that builds cash value. Now I'm educating them also. This builds cash value, so I put CV here. CV equals, and then I put a P here because that's going to be the premium. And I'll go over this a little slower. I'm going quick right now because a lot of people want to know this fast and get off and get, you know, on their day. And the longer you keep coming here, the more this will infect you and be a part of your everyday sales presentation. So they got $10,000 in life insurance. We're trying to find out what the cash value was. If they don't know, ask them, do you have a copy of the policy? I'll be able to tell you what the cash value is. If they pull that policy out for you, you just earn more trust. See, a lot of people are the kind of people that stare around the house. They try to figure out how to build rapport before they pull anything out. That's not how I do it at all. I used to do it that way, but people love, like, wouldn't you like somebody coming into your house and getting to the point, but at the same time, you're learning how to build rapport to the point of trust so they know, like, and trust you to a point where they're going to purchase the product off you because you're knowledgeable and you showed them a different way to help themselves and helps protect the house or the final expenses and final arrangements. So the cash value shows it in a sheet. If it does not, ask the premium next. If they don't have a copy of the policy, ask, so what are you paying on this a month? And how many years ago did you get it? So right here, put years equals, and let's say that they've had it 7 years. Okay, well, I know that Transamerica is, I think they're at 4, they might be at 4% or 4.5, if anybody can tell me that in notes somewhere. I'm not sure. But anyway, long story short, it's building interest. It could be a way to get them cash value if they need it, and it could be a way to replace a policy right now. So you have 2 policies with cash value. Let's say each one has $3,000 in it. Maybe it's a hell of a lot less, guys, but I'm not sure. The premium payments. What is the premium payment, by the way, Mr. and Mrs. Jones? Mr. Jones's is, let's say his is $75 and Mrs. Jones's is $65. So mathematically, I already have numbers to work from that will go into a new product. All right. So what I do is I use what they're already using and I transfer it into a new product by telling them, check this out. Look at this. If somebody has cash value and they have a $10,000 policy, the company now only owes you $7,000. $3,000 of that money is $3,000 of that 10 is now, that's yours. Okay. 7,000. And then as the year goes on, and you guys, this is a healthy individual, of course, we're going to speak about, make sure things are perfect for the simple sale. That if they're healthy and it's only 7 years later, due to some of the products I have, I could probably get them for $75 on a 65-year-old male. I'll easily get them 25,000. You know what I mean? And then I'll teach them how to overfund it and show them how to use the percentages that they offer on the high end, you know, due to the indexing. On a low end, they don't lose a dime, so there's no big deal there. But we have to teach people how to overfund these index products too. And we teach them how to do that because of the 401k. Remember, there's a 401k involved. So if they did not decide to turn this into an annuity, one of the first things I'm going to tell them, I'm going to tell them what I'm going to do, by the way. I'm going to tell them, look, I am going to show you what people are doing today, and that is indexing. And that means, all that means is that you're going to participate in the upsides of the market, no longer the downsides. So imagine never losing another dime. And at your guys' ages, wouldn't it be better just to hold on to, let's say it was $250,000, then take a 30% hit due to the fact we go to war with Korea, the world economy crushes and you lose 33%. I don't have the math on that, but what's 33%? If anybody can click that up here and tell me what that is, that'd be great. But 33% loss on $250,000, anybody speak up? That'd be helpful for me.
Roughly 83.
Tell me what that is one more time, Heather.
Roughly 83,000.
$83,000 is the loss, right? How much does that leave them?
About 166.
$166,000. Now, over the next 10 years, they have $16,600 to live off of, plus his $2,000 of Social Security, and people are living longer, period. There's your way in. So I'm going to erase this, and we're going to start over again. and I'll go over this again if we need to. We'll go over it as many times as you guys need to go over this. We'll go over it. I am not in any hurry. So we have $2,000 in Social Security on Mr. Jones. Mrs. Jones has $735. We have a 401k worth $250,000. Worst case scenario, it comes to $166,000, negative $83,000, I believe she said. And Mrs. Jones has a bad scenario too, because she has to wait for this number to kick in on worst case scenario, 6 to 12 months. Now she has to live on that, plus she gets this with some tax consequences, mind you. So if we annuitize that money and we show them an illustration, guys, if you don't have a laptop and you don't have a way to do this illustration, use their computers at home. If you don't have a computer at home, use your cell phone. But get on the phone, tell them, I'm going to take a moment and I'm going to show you what others are doing just to protect you in all ways, shape, or form. I know we're here for mortgage protection and it still is participating due to the fact of mortgage protection. This could be your answer also. So what I'm going to do is I'm going to lay down a couple options for you. Okay, is that fair enough? You're going to say yes. So what I do is I take the $250,000. I use a product. I won't say any product names right now, but I have several products that we have to choose from. And what we can do is we can show them the past 10 and 20-year performances of if they were with the certain companies. And the company that I would choose to use would show a performance of them being at $500,000 plus today if they were with them for the past 10 years. There's not a stockbroker in the world that can do that for them. There's fees, there's brokerage fees, there's taxation. It's absurd just to even do it at their age, okay? The money-making years are over with because they don't have real money to shovel into it and they're not being matched by their company anymore. So what we want to do is show them that number. This is your new retire. You get 10% access every year, meaning next year, Mr. Jones, you could pull 50 grand out of that bad boy. You could fix the house up, go take a vacation. Now the taxation on this is lower. If you don't know annuity taxation, it's more or less on the seed than the harvest. That's a good way to explain it. Let's go into the mortgage sale itself and find the numbers, okay? Let's find the numbers. I say finding the numbers. How are we going to do that? We're going to use this tool here. I'm going to show this on here first, and then I'll show it to you here in a second. This is clearly stating everything that the individual is going to be left with and what they're left with together. Now, at the bottom, it says his income, her income, and then subtract the two that are left over after you've done all the math, meaning that they paid their mortgage, they paid the cable bill, they paid this and that. Let's just say that they have roughly $6,000 a month coming in. And they have $3,000 going out. Now, most people, if you just guess this with him and you don't do the real math, even when you do the real math, they're still off because there's no credit cards on here, which I should have put on here. But at the end of the day, I kept credit cards off here because credit cards can die with people. They need to get life insurance before they need to start paying their credit card bills off. So what I'm going to do is I'm going to say, look, on average, and I don't just mark down 3,000. Here's what I do. I say on average, do you have $1,000 to about $3,000 left a month over? And most of them will say yes, because I know I'm right. I've been doing this long enough to say I know I'm close to right. And what I'll do with that number is that's the number I'm going to use. Now I know what I'm able to use for premium. Plus, I have the old policies, which have $75 in them and $65. Why not get them $3,000 in cash value total between the two of them? That's like either $4,000 to $5,000, $6,000 that they can walk away with. They were buying something new. They knew this was going to cost them something, and allow them the chance to start over in a new product. Remember to teach them again that because they've been with Transamerica so long that they bought a $10,000 policy, and the best return on a premium, best return on investment on that, I have to erase this and start at the top again. The best return on investment on that 10 grand is this. is that the first 65 bucks was paid and Mr. Jones passed away that day. That's the best return on investment, but now it's 7 years later and they got 3,000 bucks built up. So equals the company only owes them $7,000 of the company's money. So you see what I'm doing here? I'm teaching them, like, it kind of hits them saying, oh, you know what? It's not really that they owe me 10,000. 3,000 of that is actually my money. Is that what you're telling me, kid? Yeah, that's exactly what I'm telling you. So here's what we can do. Now we got to do the health. This is where you do the health. Go over the health questions, and 9 times out of 10, if you don't have a laptop and you're using index products, you would want to use an illustration that's put together already previously before you coming there. So you're going to ask, do they smoke, closest age, and the products that I use are indexed. I don't term things out. If you're terming, then okay to do that, do whatever you got to. But it's the same underwriting, and sometimes it's close to the same numbers you can get to in some scenarios. But, I mean, same face amounts. So at the end of the day, I use index, and I show them, you know, percentages that they can earn on their cash value. Because a lot of people I teach today, that check this out, Mr. Jones, if I can get you a $100,000 policy and it costs you $300 a month, think about this. And I show them the cash value sheet. I show them where they'll be in 20 years, 10 years. And I say, just hypothetically, if your wife passes, God forbid, if she goes before you, all you need to do is stop this policy and cash it in for the cash. It becomes an extra retirement plan. On top of that, we doubled your numbers with a good market. We have the possibilities of doubling your numbers in the indexed annuity product. So no more downsides to the market, no more broker fees. You have a product that can double in size, which is fantastic for you. You walk away total, check this out, doing it my way, and I'll slice it down what they had. They had $10,000 each. They're spending 65 bucks for him, 75 for him, 65 for her. I want you guys to try to use those numbers and add them into the new premium. Get them the cash value out of here. And that's a great way to sell. Mr. Jones, for any reason, do you guys need money? Who do you know that's going to say no to you? Everybody needs money. Yeah, I need cash today. Of course, kid. What do you mean? Yes, I could use some money today. So at the end of the day, what we're going to do is try to use this premium, blend it with the money that we know is left over due to our financial sheet. Remember, you told them from the beginning you were going to treat this just like they walked into your office, okay? And if you do that, you have the ability to have more control. As soon as you say that, like it's your office now. I'm going to even show you how seating should work too in a second. So $10,000 is $250,000 annuity. I'm sorry, 401k. That does lose money. Or it just does lose money every month. There's brokerage fees. They're losing money every month and they don't see it. So on average, brokerage fees can be $100 to hell, it depends on the brokerage. It could be $1,000 a month. Who knows? You never know until you call the brokerage to find out. So in this case here, they didn't have policies. So to get the exact cash value number, you would need to get on the phone with Transamerica. How do you do that? I'm going to say, Mr. Jones, for us to know exactly what your cash value is today, and it is important for you to know because it's your money. You know, so here's what I'm going to do. I'm a part of them. They're a big part of our organization. I have their number right in my phone. I'm just going to give them a quick call. I'm going to find out what that is. Guys, I'm telling them what we're doing. I'm not asking for permission. I'm telling them exactly what we're doing. So I call them. I'm dialing it while I'm telling them. I'm going to call Transamerica. They're going to need permission to speak on your behalf. Here's the phone. Give me permission. Hey, Transamerica, this is Jace. Here's the policy number. If they don't have the policy number, they might need your Social Security or the last 4 of your Social Security. Don't worry, Social Security. It's just how they know it's you, and they can figure out it's you. So if you have any fears of using, if somebody brings up fear of using Social Security, talk them out of it. It's no big deal. Get this all information that you need to get to the end part of this sale, which will be knowing the exact cash value on each policy. Put Mrs. Jones on next. Write this stuff down. Make sure you're writing notes down. Get the issue date and get the policy number. Okay. Make sure you always get the issue date and the policy number off these old policies. So at the end of the day, we know that their income is $6,000 a month. On average, they have $1,000 to $3,000 a month left over. Mr. and Mrs. Jones, on average, which number are you closer to each month? We're closer to the $3,000 marker. Now, here's what I do. I say, here, you really, Mrs. Jones, would you stay here if Mr. Jones was no longer here? And you believe it or not, you'd be surprised. Some people say no, some people say yes. At the end of the day, here's what we want to ask that question, is because we don't know if she's staying here. Your job is to protect the equity in that house, though, from loss. A lot of homes are due to the fact that people only have Social Security coming in. And if that were the case, just bear with me. If Mr. Jones has $2,000 a month and Mrs. Jones has $375, and she has to wait a year, and the mortgage is $1,500 a month, and the car payment's $500, and so on and so on, you know that she can't survive this. So obviously the answer is, Mrs. Jones, we need to find you a way to buy time to sell this home for the equity built into it, because this is your retirement plan. And maybe the home's too big for you at one time. So at the end of the day, we're teaching them a couple things. We're teaching them, one, how to buy the first year out of this house, get the equity that's in the home within the first year of them passing, or within the first 10 years, 20 years. It doesn't matter when they pass, but within the first year of them passing, the reason that part's important is because for Social Security reasons, she can only be living on $735. Now, in this case, he has a 401k. You're going to show him an illustration. Mr. Jones, I don't have a printer. Do you have a printer, by the way? I say it like that. I say, hey, do you guys have a printer? Yeah, we have a printer. You have a computer, you have a printer. Great. I'll tell you what I'm going to need to do. I'm going to need to get this sent, and I'm going to print it up. Would that be okay? I'll buy you ink. When I come back, I'll buy you ink. I say, I'm already assuming all this sale, by the way. When I come back, I'm going to buy you ink. Is that fair enough? Okay, great. Let's get this printed up. So what I'm able to show them is the non-guaranteed illustration in an annuity that takes a 10 to 20-year look back and show them if they were with that company for as long as they should have been, that their numbers would be this way. And at their age, they have the chance to do this again, figuring that people live to age 90 today, believe it or not, you know. So we have definitely found a way just in this product to pay the mortgage off. Now, let's say the mortgage is $180,000. Now, I don't know what the premium would be to get to $180,000 without doing an illustration. But if anybody has, I'll tell you what we could do. We could use Mutual of Omaha's GUL. Heather, do you have that product? Are you still on here, Heather? Where'd Heather go? I'm going to kill it. She got off. Anyway, if we use Mutual of Omaha, we can do an illustration over our phone. The other company that we use, National Group Life, you have to contact the company or have a laptop to do the illustration. Hypothetically, I know that they have the money though. So what I'm going to present is this. I'm going to put down $300. I'm going to put down $500. I'm going to put down $750 without fear, without any fear, because one, it's an investment. Number 2, it pays off the home. Number 3, it gives her a lifestyle that she's used to. So when he passes away, let's say that this 300 is the 180 grand, okay? We got the investment part, plus if Mrs. Jones passes away before him, all he has to do is pull the cash value out, unless he wants to leave it to the kids or grandkids. Now this 500 is probably going to be a hell of a lot more. It's going to be probably like 250, something like that. And let's say this 750 is 350. $350,000. Okay? Why do people like put numbers like that towards me? Because I explained it all to them. And you know the other thing is that here's our big weapon you guys need to remember to ask. 1, are you going to attempt to double up on the mortgage to get it paid off earlier? And you'd be surprised, I probably get yeses half the time. Out of every 10 people, it's about half the time. So 5 out of 10 people are going to say, yes, I'm going to try to pay 2 times the amount on my mortgage that is $1,500. So $1,500, that's $3,000 a month. Take that 15, okay? Now, if we take 15 off $180,000, she still owes basically $180,000 minus $1,500. If we take $1,500 and we put it towards a product that we can protect them from day one with, we could show them living benefits. We could show them cash value earnings. We could show them a lifestyle that they want to continue living into the future. Plus, you have the indexed annuity product. You could possibly make these people millionaires one day. You know, and if that's not their goal 9 times out of 10, it's just survival. But it's a nice thought to have $1 million compared to living off of 50,000. Always remember to cut the numbers down smaller too. What I mean by that is this: is if you teach somebody that if they retire with $100,000 in their 401k, all they see is this big number that's going to last forever. First of all, it's taxed. So it's not 100 grand right out of the gates. Number 2, if it's taxed heavily enough or whatever the earnings were, let's say it's let's just say it's $90,000. That's $9,000 for the next 10 years to live on. When you show them the smaller numbers, it becomes the real reality of what they're going to survive on. Now, the word inflation again. And if you guys know anything about inflation, you go out there and spend money on gas and food, and believe me, these cats been around longer than all of you. So at the end of the day, what you're trying to get through them is that inflation, and this number here is a level income, meaning they don't have the ability to outperform inflation unless they had a product that was performing with inflation. And that's your job. Find products that deal with inflation or help deflect inflation. And you have tax increases. They got these 2 things going against them, and now you've come up with a way to deflect these 2 things due to finding indexing products in your sales process and in your products too. Because if you don't have the right products and you're using all the wrong products, look, if all you guys that are going in there with term, I'm going to replace your policies. Why? Not in generally people in here. I'm just speaking in general. Because if I'm able to get the same exact number, sometimes people will even pay more to know that they have access to their cash still. Now, in a term product, they might be able to get more, but then let's think about it. If somebody's spending $300 for 30 years, that's what, 3,600, $36,000. Now, if I don't have a calculator here, my wife's really screwing me up today. if I had a calculator here, I'd take $36,000 and I would multiply that by just take a small number, take 4%. Take 4% and multiply that by for the first 10 years, that's 40%. Over the next 30 years, how much is that? That's 40, 40, 40. That's 120% added on to $36,000. That if they outlive that, now at age 65, there's a chance he may not. But in the index product, I can show him in probably the first 10 years to the first 15 years, that'll probably have $36,000 in cash value already built up into it. Still have access to cash. The face amount might be, it may be small. Not all the time is an index product smaller than a term product. And sometimes it could be the same premium. You guys just need to go in there and adjust the numbers. Now, if there's any husband and wife crews out there, or you can find a way, I'll tell you the best way to run this business, like a real business, is start delegating work out. If you're smart, you'll delegate. You will take somebody with you and teach them how to do the paperwork while you do the things that I'm doing right now in front of you. Now, tell me one of you that wouldn't have purchased it. If I slowed down on this too, I was kind of quick. But if I really went over your money with you every month, and I treated you with the utmost respect and taught you something about inflation and about what the numbers will be then, not now, then, wouldn't it make more sense to know what the numbers are going to be, but then, not now? Because that's what we're trying to protect, is the future. So most important thing that you can do is the numbers. It's all day a numbers game for me. If I can make numbers always, and I do, I always make them make sense. I take a sheet like this and I will put the monthly earnings minus what's going out, and I'll even take a little more spending cash. I always tell them this: I'm not here to take any food off the table. I'm here to make sure that you guys live a great lifestyle, not just today, but tomorrow. But if, let's say hypothetically, Mr. Jones, that you don't decide to do the index product, which I pray that you do, because I hate to see you lose another dime due to market volatility. You have to say market volatility. You have to say words like inflation. You have to say words like, market volatility again and inflation. But that's just one point of this. Now let's rewind. How did I get into this house? Where did I start? Well, I started from some fantastic resources that knew I was coming. They filled it out. They knew I was coming. They may have filled out multiples, okay? So let's say this sale's done. They purchased it. Let me erase this. I did $52,000 in 3.5 weeks, and in Tuesday, Wednesday, Thursday, over $21,000. That was with 7 sits for the 21. 7 sits, okay? So do the math on that. Do the average premium, okay? And then for the 52, I think, I probably didn't sit with more than, I don't know, maybe 20 people, I guess, that time. So the reason I'm selling less and I'm making more than most people that I know anyway, and I talk to a lot of people. I talk to a lot of reps on the phone, recruiting and stuff like that. Nobody's really doing it this way. And this is the brightest, smartest way, that it's the most attractive way that you can present opportunity to protect someone's family, someone's property, and their future money. That's what it's about. You think anybody wants to watch their money go out the door in a term product when they can have it still? If you can learn the index products, please learn them. They come with all the benefits that the term products do. However, underwriting can be a little difficult sometimes. Can be a longer wait. Even term can be fully underwritten, so that can be a long way too. So across the board, they can be very even. What happens if somebody isn't eligible for one of these term products or an index product? I sold $8,000 in graded products the other day. $8,000 in graded product. That was the premium I walked out. That was my pay. It was a little more than that actually, but graded. You know what I mean? Why? Because of this. Because of the importance of understanding value. Even with whole life, there's still cash value built up. So what do you think I told him? Does anybody understand what I would have told him? Here's what I would have told him. Mr. Jones, if she goes before you, you don't need this anymore. Why? I'm going to tell you why. Because his income was $6,500 a month. You know this woman's income? Absolutely zero. And they weren't even married. So she doesn't even get his veterans check. She doesn't get a Social Security. So it was very vital that this happened. They had no choice but to do it. They didn't have anything on the table. And due to his health and age, it became a graded product. He has to take the chance. So in most cases, this is a 30, 70, 100%. You know, they get 30% the first year, 70%, 100. Or if it's ROP, it's a little different. But at the end of the day, there's always a mathematical solution. And if you guys get more interested in math and less about the product, you'll sell more life, annuities, and mortgage protection than you ever thought of before. Knowing how to do mathematical issues that people don't do on their own, and they never ask the question to their insignificant other, like, hey, Mrs. Jones, would you live here if Mr. Jones was no longer here anymore? The answer is they don't even know that. And I've had a lot of women say, no, I wouldn't. I said, but if the house was paid off, would you stay? Absolutely. You see that? And guys, if you're dealing with one person that has massive control, you got the old man. He's really working the system. He's all about numbers. He's tearing you apart. Why he doesn't need it. And you say, okay, you know what? Great, Mr. Jones, gotcha. I gotcha. I don't really respect what he's saying because I'm looking at his wife and she's not saying anything. But I ask her, I say, listen, how do you feel about this in all honesty? And before she says anything, I'll say, because here's what you're left with. If God forbid he doesn't do this, you're going to get this Social Security, your Social Security for 1 year. Remember, it doesn't have to be that way, but it could be the worst case scenario. And that's what you're there to do, is teach the worst case scenario. You have to be the coach of the worst case scenario. And if you become that coach along with knowing how to do numbers, very simple mathematical numbers, like how much is the mortgage a month? Write it down right in front of them. How do I do that? I say, in the beginning of my sale, I already told them, I'm going to treat this just like you came to my office, but guess what? I brought my office to you today. So let's go over a few things. So out of the two of you, who has the two of the higher Social Securities again? The only reason I ask, by the way, is because that's what the significant other is going to be left with. And again, out of the two of you, who has the higher of the two Social Securities? Because the only reason I asked is because out of the two of you, that's what the other significant other is going to be left with. And it's an important number that you guys know. Okay, great. Then now you have math of what's coming in. Okay? Don't ask about annuities yet. Don't do that until later on. So let's go mathematically over the numbers. Got mortgage protection, electric, gas bills, car payments, car insurance, pet food, eating out, tithing, lawn care, kids, grandkids, tithing, cable, internet, phone, cell phone bills, extra cash, savings. What are they putting in their savings account a month? And guys, when you're doing this, if anybody asks me for this sheet, by the way, and I'll email it to you. If anybody asks for this sheet, get the answer for them. Don't sit there and wait for the answer. I've become smart enough to know what the mortgage is because it's on the mortgage protection, but I don't know what the monthly is. and always ask, is this a 30-year mortgage? Because then you want to ask, are you going to double up on the payments to try to shorten that up? And I'll tell you what, that's a great idea, Mr. Jones, but how about this? Let me show you what people are doing today. Again, I said, let me show you what people are doing today, because we're talking about an era of time that they lived in that is no longer anymore. People don't double up on their mortgage because they want to use financial products like ours to pay it. If God forbid he leaves tomorrow and goes get hit by a bus, boom, that house is paid off. He croaks it, he passes away for any reason whatsoever, the house is paid off. Now, how about this? Living benefits. 95%, 9 times out of 10 is a living benefit or a monthly payment to help out for bills. Think about all these things that are coming. And if you can show them about the indexed annuity products, compared to their $250,000 that they had previously before that, and you show them a product that had a 10-year look on if they were with that company for 10 years. I don't know if you guys can see that board. I'm sorry if this, I really can't tell if Facebook screwed up today. If it is, I apologize. But anyway, the 10-year look in the past, if you were to show the client what it would look like in the past 10 years, and then you would say, look, right now you'd have $500,000 put away if you were with this company. You're 65. By the time you're 75, you have $500,000 plus you're allowed 10%. Now, the flip side of that is I could take your $250,000 and I could ask the company what income I could get both of you for the rest of your life, just based off your 250 grand. There's another option. But if it were me, I would have let it accumulate 9 times out of 10, 6%, 8.6. These are what these annuity companies are showing. The one I have this is what they're showing on the illustration. Doesn't that, everybody that knows annuities knows it doesn't have to stay there. But if it's the past 10-year look and it's looking like this and it comes from 250,000, it looks like it's staying there, guys. So, a long story short, this number obviously outperforms the 250 grand. If you turn on a monthly income from the 250,000, you can get them an income of probably $1,000 to $2,000 a month each for the rest of their lives. Maybe it's less. Let's say it's $700 each a month for the rest of their lives, though. You know what I mean? And even if the company itself loses their 250 grand, they still have to honor the $700 to $1,000 a month they owe each one of them jointly. And if the other survives, then you have to pay them too for the rest of their lives. It's absolutely extraordinary what you guys can do for people today. It's mind-blowing to me that we're not being asked to, if you guys could be learning this and teaching people, not only one, your premium numbers will go through the roof. Number two, I'm teaching people how to sell 2 to 4 annuities a month while making $20,000 to $50,000 a month, and your lead costs went down. Why? Because you're selling higher products, higher premium products. Now, let's go to final expense. Final expense, people still have mortgages, okay? So all you have to do is flip the script on it. You just throw that in there. I know you guys want to cover the burial, but with this list I give you, it automatically shows that the mortgage is a big part of the deal. You got the mortgage, you got all this stuff coming, at them every single month. I mean, it never ends. Here's the special part that I've learned after doing this so many years is that what I found this number out, by the way, and it's pretty important that you guys know this, is that whatever they are both spending together on bills today together with an average tax bracket, not some millionaire, but somebody that has an income of 50 to 100 grand a year, that is usually what the significant other will need to pay little bit less, maybe $500 to $1,000 less than what they were paying 10 years ago. So in 10 years, Mrs. Jones is going to have to come up with the same number. So it's just amazing that these numbers are just they're so they prove everything. You cannot get around the numbers. Like if somebody has an argument with you, say, well, wait a minute, let's just take a look at this again. I must have missed something. Maybe we missed something. You're telling me that your eating out habit alone is $500 a month, and I get that. And then you're telling me to get your wife, Mrs. Jones, right? Would I be incorrect by saying you guys eat out? And I want to ask her. Because 9 times out of 10, that's who we're trying to cover, believe it or not. You want to cover, if you don't know who to cover, you want to cover the one who has the less of the income after the other passes, okay? I feel that people think because they're leaving $4,000 a month to their significant other, $3,000, that they're going to be okay. But what are they missing? Can anybody answer that? Can I be quiet for a second? If somebody has $4,000 a month coming in right now, what would you tell them that they're missing 10 years from now? Anybody have an idea what they'd be missing in 10 years from now? What? You want to know? Anybody have an idea what number they'd be missing? If inflation. That's what they'd be missing. They'd be missing inflation, which isn't really a number. It's a theory. Inflation, but it's not even a theory. It's factual. It's a factual thing that happens, and it's happening at 4% a year. So you're telling me today, Mr. Jones, that this $4,000 over here is good today, and it is. It's great. Applaud you for that. Let's go 10 years down the line when it's 40% more for things, okay? That doesn't lie. That speaks the truth. And every sale I've ever made has been off of these numbers, and they are high. I mean, you would not believe how many houses I walk out of with sales because I prove these numbers. And if you guys would just take advantage of this every single Saturday, I've been doing this for, I don't know, 6 months now, I think. And there are people that were never selling that are now out there selling. And they're on here. They'll brag about it. Not everybody's on air today, but, some days the people that get it, I'll tell you why they're not on here too, is because Saturdays are important to dial. When we dial on a Saturday, we probably set 3 to 4 times more appointments than if we dial on a weekday. And it's much simpler. 9 to 10. Instead of doing it on a weekday from 5 to 9, I can get more done faster from 9 to 10, 11 than taking it from 4 to 9 and doing the same numbers. I've done the math for many years, guys, and I'm telling you that's how it works. And for whatever reason, people are a little more cheerful on the weekends. So it's pretty cool. Payday was Friday. They're chilling out, It's all good. Do not do a one-legger. If a one-legger is there, then ask, is there anybody else that helps you make important decisions? If there is absolutely nobody, the last one is, who's the beneficiary? You got 3 options. Significant other is there, okay? Significant other isn't there. Who helps you make important decisions? Not financial decisions, important decisions. Number 3, who's the beneficiary? Because there's 3 ways. Most people use 2. They say, the significant other, and they say, who helps you make important decisions? The third is the beneficiary. Get these people in the house and get them to know, like, and trust you, not by talking about how nice their yard is or how beautiful the walls are. You can compliment. When I'm going through this stuff, and I start right out of the gates, I get right into it. Hey, so did you guys is this a mortgage? Is this a brand new home, or is this a refinance? I get right into it. And, I say, oh, man, you know what? While I'm talking, I'm doing some things. I might say, that pool's amazing, incredible. Tell you what I want you to do. Invite me to your first pool party, man. I would love it. I haven't been in a pool in so long. Invite me to your first. I'm already making it like I'm a part of their life, forever. I don't want to be their rep. I want to be the family rep. Why would you just want to be their rep when you can be the family rep? Remember when I was talking about the dials? And this is important for you to do. If any of you are not with my company and you were to join with me, I promise you your numbers will double. They might quadruple. And I'm going to tell you why. Because I teach this stuff on a regular basis. There's more advanced training on annuities, by the way, on during the weekdays. It changes some days. It's in the evenings. So you just make room for it because it's important. I'm in the process of writing a book. I also have groups that are asking me to do DVD sets on this, starting from ground zero, all the way through final expense, all the way through mortgage protection, all the way through annuities, and how I pour these numbers on the boards. I don't want to brag. I'm not going to show you numbers, but the factual numbers they're large. They're very large. Why am I still in the field? Well, because I can't find any. I own the territory in Central Florida. I own 7 counties. I can take on more. And if there's anybody out there that's out there, Ohio, Pennsylvania, Maryland, Texas, Florida, Georgia, Tennessee, these are all necessary places. And they also have B leads. They have B leads that are $3 a pop. What are those? Those are my bone crushers is what those are. These are the people that didn't sell and they're 1 to 30 days old most of the time. 1 to 30 days old because somebody carried them around, somebody didn't sell them. They're $3. Mortgage protection lead is $40. I've seen them at $100. Mind you, you're talking to a guy that has been to 4 different IMOs I've helped build. I've been to 3 different final expense companies. I had money when I came into this industry, and everywhere I went, American Income. Like, I don't want to talk bad about companies because they gave me a shot. They're great companies. They do the job too. They do it well. They don't do it as good as we can. And you know what your baby is out there is being able to replace policies. If you can become the best at replacing policies, you become the highest writer there is. You know why? 1, you know what they have left over a month. You knew you were coming to put more money on theirs. Okay, they knew that this wasn't free. 2, if you can get them cash value and get some of their bills paid off, like credit card bills. I found $21,000 in American Income Life product, and they had 8 policies, 4 on each. I found $21,000. Now, they had $100,000 each on them, all right? They wanted that debt paid back so bad that they took the cash value out, and they literally decreased the amount of life insurance they had, however, at a higher interest rate earning process. So if they overfund, they can literally go beyond the $100,000 that they were in their lifetime because they were younger, and it's okay. I don't usually do that kind of stuff, but in their case, they begged me to get their credit card debt paid. They had $22,000 in cash value. We did it. We paid it off. Look, find the people's problems, man. Stop finding your own solution for financial issue for your financial issues. Find their financial issues, and your financial problems will be solved. I promise you. Now, I don't think, well, here's what I'll go over now. Final expense is pretty much the same, because of this sheet, and there's one other one, by the way, too. There's this one here, too, which I'll get it close to the camera. It says mortgage protection, financial planner, and all it states on there is the inheritance of the living partner on it. And it says Social Security leftover, 401k, pension, any investments in cash. The monthly mortgage, the mortgage owed, the appraisal. I forgot to mention, The appraisal on the, hey, Patrick, I think you're on Facebook, but I seen that group me. That's fantastic. He just put up some numbers today. By the way, so anyway, what I'm trying to get at, the appraisal on the home, very important to get that right from the beginning. By the way, what's the appraisal on the home, Mr. Jones? And that's on the sheet too, by the way. Why do you ask that question? Because if Mrs. Jones was forced to have to sell that house, you don't have to cover the mortgage, guys. Your mortgage protection is not only about covering the mortgage. It's about covering the equity too. Meaning if you know that their finances doesn't equal that they have enough to purchase a product that covers the whole mortgage, then what your job is to do is to buy Mrs. Jones 2 years. 1 year to sell the house, to 2 years to sell the house, and money to get into her own home with a down payment or just money to survive. A move these days is $5,000 minimum, and that's doesn't take much furniture to move that, depending on how far you're going to. But you know, could be $1,000. Well, cremation. By the way, Mr. or Mrs. Jones, what are you guys up to? What are you doing? You gonna do a cremation? You doing a burial? I'm with the vets. They take care of everything. No, they don't, by the way. Don't let a veteran tell you that it's all taken care of. Become the educator. No, they don't. They don't dig the hole. In fact, they'll charge you twice as much on Saturday. Don't believe that. They give you a flag and they give you a plaque. That's it, okay? If it's a cremation, then yes, they can possibly take care of it. What else do they get from Social Security? They get $225. What are they going to do with that? Put gas in the car for 2 weeks? I mean, you know, guys, get real with these numbers with these people. Real. You know what I mean? Get down to every penny. Do not, by the way, ever, if somebody tells you that their bill, their life insurance, or how about their electric bill is $97.63, write that down. Do your math exact. You're not here to hurt people, and you're not here to take food off the table. You're not here to take their life away from them. You're here to shine when the other one's gone. You're here to replace the income of the person that left. You're here to protect the equity that's on that home that can become a retirement plan for them within the first 2 years of the death. The home is new. The appraisal still could be higher than what they purchased it for. That's why you want to know what the appraisal is. So if somebody bought a $180,000 house, okay, the appraisal could be $200,000. Instantly, you write down, there's $20,000 in equity that we need to protect, Mrs. Jones. Sorry about the board. It's all sloppy sometimes, but when you guys get back and I start doing the video series, I'm going to cover this board, this wall back here will be a big whiteboard, so we'll do it a little bigger. And I just bought a brand new Mac computer that we can do these off of a little better too. I think it has a better screen. I'd like to know, and I haven't been stumped yet, but if you don't have questions, that must mean that you're also making 50 to 100 grand a month. So if you do want to learn how to do that kind of number, and I mean this, ask me questions. Nobody needs to know who you are, really. None of us really know each other. In this scenario, there's a lot of people I don't know. I would love to answer any questions that you have. Throw me some curveballs if you got them. What would you do type of thing, you know? How would you handle this? What would you say? How about dialing? Let's go over my phone script, by the way, real quickly. Just so you're aware that, you know, when I first started, they handed me this 4-page phone script. And they're like, you can't go out and sell until you memorize this. And I used to own personal training facilities, guys. And I would go into health clubs and install my gyms into those places, my studios. And I would pick up the phone and call Mrs. Jones up And I would tell her to bring four of her friends. And then I'd separate the numbers and I get one big number out of small numbers. So that's what you're trying to do too. You're trying to show the big numbers into small numbers. So even when you sell large premiums, $600 a month divided by 30 days. How much is that? 30 bucks a day? My math is so bad, guys. You don't understand how many deals I do. Sometimes I need help from others. So if anybody can help me out with that. But long story short, you get the idea of how to do it. With that being said, my phone script is real simple. I'm going to do final expense first, and then I'll do mortgage protection. Let's say this is the final. Do I have one here? Oh, you know what else I can do? I can actually show you cash values. I want to show you what I show people, okay? The first thing I show them. I want to show you this. Check this out. So, and this is awkward, but I can show this here. If this individual, I just jag around. I said, look, God forbid, if you were to live to 120, you bought a policy that's $50,000, by the way, but if you were to live to 120 years of age, this be worth about 800 grand. As investors into your business, this is also an investment into your business. You all should be taking 500 bucks a month and drilling it into these products, drilling it, overfunding, getting prepared for. You have a 401k? Why would you want one? You know, and if you do, are they matching it? Great, okay. But if you could have something like this and overfund it and wait for the good sides of the market and the downsides, it's just like a 401k, but it's a little more steady. I mean, I've done a lot of research, and it's a lot more steady than the market-based products. So at the end of the day, this says if I work my way backwards, and give me a chance, we're almost done, guys, just hanging in. If I work my way backwards on death, now I want you to remember something. Somebody purchased a $50,000 policy, a 47-year-old female, for $80 a month. I replaced the policy, as I always do, and right out of the gates, our company is able to double that. So I don't know if you see that. They were able to spend they were able to buy a $100,000 policy for what it costs for a $50,000 policy. So we have a company that does that. I will teach you how they do that and why. But at the end of the day, check this out. At death, with the cash values and the earning percentage, let's look at the percentages on the sides. You see that? That says 7%. That's right over here. No company in their right mind is going to put these kind of numbers on paper if they're not truly aware that they can hit it with all their invested money. And I'm going to tell you why. They would get sued from here to high hell. So at the end of the day, here we go. Age 85. Let's go age 90. Now, we'll stick with age 85. Age 85, you have $57,000 in cash value so far, okay? You got a $100,000 policy. Age 90, you got $75,000. That's putting 80 bucks a month away. You know what I mean? Like, you're going to miss that? Which one of you on here doesn't blow 80 bucks? Let me tell you something. I blew that today, I think. Check this out. I bought this Red Bull. I bought this iced tea just for this occasion. I bought this water here. I mean, you know, I even feel bad not watching my money when I know that this opportunity is here for me. And I do this. I'm involved in several different things. So let me give you, for instance, my $500 a month will be worth $1.2 million in the next 20 years or more. When I overfund it, as my money goes up, I will overfund that $1,000, $2,000, $3,000, taking advantage of the compounding interest. And it'll hit $3-4 million, and I will be a millionaire one day just by doing that. It doesn't take you writing all this business. It doesn't take a big downline to become a millionaire in this game if you play the numbers right too. So remember, I want to build a hell of a team, don't get me wrong, but teach them how to do it too, because you get great overrides on that, and it's paid as earned. So they're kind of like paying you for the policy for the first couple of years. It's not a bad idea, guys. Overfund your own products. Get involved in, how about final expense? Final expense phone script. Hi, Mrs. Jones. My name is Jason. I'm doing a follow-up call to the call that you received yesterday. I'm going to repeat that one more time. Hi, Mrs. Jones. My name's Jason. I'm doing a follow-up call to the call that you received yesterday about that final expense information. My job is just to get that information out to you. I'm going to need to see you and Mr. Jones about 2 p.m. tomorrow. A lot of people ask me how I'm doing mortgage protection at like 9 a.m., 10. Most people do mortgage protection in the evening. I don't. I don't know if it's my demographics in Florida or what, but even in Pittsburgh, I didn't see people past like, 6. I might be home by 7, some that it's a late night. Most of the time I'm home by 4, which is good for me, I guess. But again, for final expense, hey, Mr. Jones, my name's Jason. I'm doing a follow-up call. I'm doing a follow-up call to the call that you had received yesterday pertaining to that final expense information you requested. Now, here's another way you could say it. I'm doing a follow-up call to that call you received yesterday on that final expense information, and I needed to confirm your address just to make sure I'm getting this stuff out to the right place. But I like it doing it the first way better. Gets right to the point. Hey, Mrs. Jones, my name's Jason. I'm doing a follow-up call to the call that you received 24 hours ago. If you are not dialing your leads immediately and you're hanging on to them, you're wasting your time, your schedule's not in order, and you need to put a schedule better in order. You need to jump on them and get the fear thing out of your get crazy with this stuff, man. Have a blast. Go in their home, own the joint. Go in and just teach them something and become a coach. If you think of yourself as a coach more than some life insurance rep just running around selling life insurance products, you're a coach. Coach these people to finances that they never thought possible without your knowledge. And that's what I do, and that's why I make big money, big dollar signs, big premiums. I don't know. I think that last premium, I sold one premium the other day. I think it was $3,000 a month. But to me, like anymore, it's like no big deal. I expect that. I remember starting in the business. If I wrote a $20 app for final expense, I was like, oh my God, yes. How much is that? Like I made like $220. Cool. I mean, that's still good too for like sitting down for 30 minutes, you know. But when you're able to do these kind of numbers, that's in per sale. And then you have like 14 more people to go. You know what I mean? Guys, I also want you guys to be well aware of the numbers. The numbers always owe you. They always owe you. If you go 10 without, the next 5 owe you. So hang in there. Keep your lead resources coming in. If you stop marketing your business, if I was to start marketing my health calls, $2,000 a month per location, by the way, to keep people running through the door to keep these trainers coming in, you can't spend a measly $200 a week. Now, in the beginning, it was hard for me, man. It was tough at that time. I had a little bit of money, but it was tough to understand it because I thought, oh, I'll buy these leads, they'll be great. And then you're with companies that recycle them and this and that. These are fresh leads, man. These are right off the press. Mortgage protection is like, you're like 9 times out of 10, I'm the first person in the home and the last one to walk out. And I want to bring one more thing up too again before I do the mortgage protection script, that when you're in that home, you need to solidify that sale. Do not sell a deal and say, hey, thank you, Mr. Jones. I'll talk to you later. I want you to get that. So what we have done here today, Mr. Jones, is we've taken your numbers and we've used the numbers from your old policies. We put them together with this new premium, okay? You got $3,000 in cash value coming. You, Mrs. Jones, you got 3. That's $6,000. So you just made $6,000. Sometimes I'll take that number and I'll turn that into an annuity too. So just understand, if you can find an extra 4,000, because the minimum annuity is usually 10, you can do a lot with this. Guys, there's so much you can do that you just haven't been taught yet, but it's easy. I couldn't spell life insurance when I started this gig. I was a personal trainer. Check it out, man. It's I don't know if you see my tattoo, but it says, I don't know how I get it. It says Trainer J up there. Trainer J. You know what I'm saying? Anyway, long story short, I was a personal trainer for like many years. I was awesome at it. I was great at it. I told you to delegate your work. Find somebody to dial for you. Teach them how to dial. If you're not teaching them, you get them here how to dial. Mortgage protection leads. Hi, is Fred there? Fred, my name's Jason. I'm doing a call on behalf of your banker's life mortgage protection information you requested about mortgage protection. I'm the rep that handles that area. I'm going to be in your area tomorrow about 4 p.m.-ish. I'm going to need you and Mrs. Jones there. That work okay for you guys at 4 p.m.? Does that work okay for you? You see how many times I said that? Now here's where I want you to solidify this. Check this out. This is important. You want to see more people? Do this. Hey, look, so we're going to set this appointment about 4 p.m. That works for you. I already said 4 p.m. like 3 times, by the way. By telling does 4 p.m. work for you? Is 4 p.m. okay for you? Does that work for you? So, yeah, okay. All right. So you guys, non-smokers, by the way, sometimes we may ask if they already have final expense life insurance in place, if they can get that out. If you're new, don't worry about it. Just set the appointment. But anyway, I want to solidify this. So so we're going to come out there. I'm going to bring you the information. We'll go over it together. About 4 p.m. I'm going to confirm the address. 123 Mary Street. Again, this is at 4 p.m. at 1234 Mary Street. And make sure I'm going to need your wife there too at 4 p.m. Okay. And that's about it. So can you do me a favor though, Fred? I'm going to write this down in my schedule right now. I'm going to write it down in my schedule. Could you get a pen and paper out? Let's write that in your schedule too. And then let's make sure you tell your wife that it's 4 p.m. on Tuesday. So let's do that right now. And then Fred, what time did we say? I get him to say it. You know how many times I said 4 p.m.? There's no way he's forgetting it. Now, what you guys are doing, you're saying 4 p.m., okay, see you later. Okay? Believe me, I just took massive control over the phone too, man. And you guys need to learn how to do that too. Learning how to do that is just by taking massive action and doing it. You know, you have to understand all day long, your failures are your successes in this business. Do you think I've walked out of home scratching my head saying, and I do that today still, and I'll say, man, what could I have said differently? What could I have done differently? How could I have acted differently? I'm like a chameleon in the home, man. Even if I'm in a bad mood, I will change it right at that door. You know what I'm saying? And it's very powerful and very important that you do so. That's about it for today, guys. Saturdays, every Saturday we usually do this at 9. This one's at 10. I figured I wanted to give more people a little more time to dial. So into the future, I want you guys dialing at 9, start at 9 a.m., go to 10, be on these webinars every single week. They are recorded. Anybody wants these pre-recorded ones, they will be on DVD soon. And I will be doing a DVD series. I don't know what I'm going to call it yet, but I'm also writing a book. I think it's going to be The Art of the Life Insurance Sale or the Life Insurance Sales or something like that, you know. But look, at the end of this thing, man, I'm going all in to coach you guys out. I want everybody. I don't think there's anybody that can't do this. You can at least make a minimum of $1,000 to $5,000 a week working 5 to 10 hours a week. I mean, guys, you don't need to be pouring 60 hours a week in to do huge numbers. I'm telling you right now, you don't. If you're writing larger premiums, okay? So if your game is larger premiums, you came to the right spot. If you want to learn how to write larger premiums, you came to the right place. Now, I do have to ask you to do this. Next week, on next Saturday, we're all invited back. Please, write down some questions for me. Now, I'm going to leave the open mic for a minute, and I would love to hear from some people. Facebook, any comments would be great. If you could like the page, share it, and come back next week. I'd love to have you. Anybody on the webinar have any questions, please ask. Unmic yourself, unmute, or unmute you all. Find out how to. Unmute yourself if you want to talk. Anyway, long story short, please ask me questions and let's get some answers out to you. You know, referrals would be a good question. I have developed something that I'm working with our team with, which is new, and it is a pre-funded card, meaning instead of going out and buying gift cards as everybody offers gift cards, I want you to be able to hand a gift card to somebody and tell them, look, the day that you get me the referral, the day that I sell the referral, okay, that day is the day that I'm going to fund. I got to lower this, guys, because I'm running out of juice on here. Sorry. Hold on a second. Shit. Where'd Facebook go? Sorry, guys. Wait. Okay. So anyway, I have no idea why this thing is screwed up like this. Rotate your device. It did. Okay, any questions out there? Anybody have any questions out there? Nobody has any questions. It's unbelievable to me. Man, you guys must be raking in the dough. Okay, that's wonderful. Listen, next week when you come on board, I'm going to do a more advanced training. If I get time, I don't know the schedule yet until today and tomorrow's over, because we have the dialers doing the dialing sessions on Saturday mornings, and we have them doing them on Sunday evenings. And yes, Sunday evenings. You have to protect people. Your job is to remember this. They asked for it. They didn't tell you when you were allowed to call, and it's none of their business anyway. You have a business to run 5 days a week. You have to get involved with your business a little more and get your investments up. Your investments should be, you know, my lead bills are anywhere from $900 to $1,000 easy a week. And if you want to, you know, sometimes it's a hell of a lot lower. It could be, you know, $300 a week too, depending on the season when mortgage protection up and down. But because my premiums are so high, it doesn't really lose the steady flow of income. So what I'd like to do next week is do another review of this. And I think the repetition that you guys see, this is a different training than any training I've ever been through. Most of the stuff I've been through is not only extremely boring, it could be 8 hours long for something that we could do in an hour or two. The next part would be to find out if your upline's interested or your downline's interested and get them involved. This needs to be duplicatable too. You understand what I'm saying? So whenever you're able to duplicate things like this, you're able to make a lot more money that way, obviously. Let me see something, guys. I got to try to hook this on somewhere so I don't have to hold it so much. So at the end of the day, what you're trying to do is you're trying to duplicate a business. Give me a second, Facebook guys out there. I'm going to put this in front of me. Hold on one second. Damn it. All right, I think this will work. Okay, there we go. Okay, all right. Okay, so look, I don't know why this Facebook, it looks weird to me. I don't know if it looks weird to you guys, but I can't fix it. I'm having trouble figuring out why it looks so like awkward. Anyway, so next week, what we're going to do is we're going to go over this again. And, you know, all you guys that came in a little late, all we did is go over some incredible sales strategies. And if you missed it, you need to be here every week and just climb on board, get on board every week. And when you see these numbers, and I think everybody can vouch that if you could understand what we were doing with what I put together is teaching people what's going out compared to what's coming in, showing Mrs. Jones what she's going to be left with, teaching you how to set appointments properly and solidifying the call so the appointment's there at all times when you get there. I have them repeat the time back to me. We're writing it in the schedule together. Guys, that's your job, man. You know, play the role of a professional. Be the business. Do you realize that you own your own company? Do a lot of you know that? You know, do you realize that? That, you know, when I was 15 years old, I owned Ferraro's Deck and Window Cleaning. Was my very first company. And by age 17, I was doing over 100 grand a year. And that was in 1990s. I mean, that was huge. By age 21, I had 6 trucks running. I sold the company, moved to Florida. I've been an entrepreneur my whole life. I wish to God I would have found this kind of business back then and had a mentor like me to be able to teach me how to sell premiums of $500,000, $1,500 a month and make it stick. Because they do. There's not much that falls off. What may happen, though, is you got to be careful on who you put through. Sometimes I just try to put people through and see if the carrier will allow it, you know what I mean? And that can go against you too a little bit. But at the end of the day, I'm just trying to help people, you know, really. I really want them to get the best products. And then I'll work my way backwards from there. And if you ever need to get back into a house, a good note on this is this. If somebody doesn't purchase from you and they are thinking about it and you've tried every scenario you can to deflect and pivot and do all your fun stuff there, you need to set an appointment from that appointment right on the spot. Do not say, okay, how long do you need to think about it? I'll call you back. They say this. Say, Mr. Jones, you know what? I'm going to be in this area tomorrow. I'll be right down the street. In fact, in about 2-3 days from now, that should be enough time. Okay, so I'll tell you what. I'll see you about 3 p.m. Do you hear how I said that? I'm not asking. I'm telling you. And remember what a doctor's office does to you. They tell you, you guys are that good. You're that important. You're that important. I mean, it's amazing. Hey, Jeremy, is that your kid there, man? That's an adorable child there, right? I just seen you popped up on the webinar. That's a cutie here, bud. Anyway, guys, go ahead, Jeremy. Go ahead.
Yeah, I appreciate it, man.
Yeah,
sure.
Not a problem, boss. Hey, Jeremy, you missed some things, but these are recorded, so I can send them out to you guys. I will need your email. If you guys, I'll tell you what I'm going to do is I'm going to text my number here on Facebook. That way everybody that can, once the old previous webinars can get them through this, just text message me, or I'll send that first. done, send. I think, wait, I might have done that wrong. Oops, don't follow that one there. 2552594. Done. That's a good number. And then I'm going to also give you guys my email. So Jeremy, what we went over was the basis of what people are spending a month with the incomes together as a couple, 9 times out of 10, due to mortgage protection. We had small life insurance policies in this scenario. We had we found a 401k. We annuitized that. We sold the mortgage protection at about $300 a month. So all in all, we had with the annuity and that, you know, we could have had I don't know, $10,000 a day, $20,000 a day at one home. And these are the numbers that I'm able to pull out of people. So I want to continue to teach this to you guys. I want to factually prove the numbers every week to you. And the great thing is you're being trained by one of the top guys in the nation who's selling at a I mean, who else sells 30 annuities a year? You know what I mean? Those are high numbers to do that almost 3, 4, 5 years in a row, to be honest with you. I'm only at 17 this year, but you know, that's still a pretty high number to be at for selling annuities. So the year's not over yet, guys. So I'm still shooting for 30. Last month, I told my Alyssa, my wife, that I wanted to do $40,000 a month, and I figured since we already hit within our first day, we did one day where we had a $21,000 day. I said, this will be our first month to hit 40 grand. And then we went beyond that to 52,000. It's unfortunate that just 2 days later that it would have went up to $75,000 in earnings if we would have just had 2 more days. So we're talking, plus we had our kid in from college. So we took him to Orlando for a basketball game against Cleveland. And we took him to the Scare House. And so if you think about doing that kind of number in 3 weeks, that's quite impressive, but not unusual to us anymore, to be honest with you. And definitely the annuity sales are not unusual. I do just want to get focused. I want to get you guys out of here. These are pre-recorded, so Jeremy and NKY and anybody out there in Facebook land, if you want to be on these or you want this emailed to you, then please just send me your email. That's all I have for today, unless Jeremy or anybody, do you have any questions that I can answer in the meantime? If you don't, then it's fine. I'll stay on here. There's not a problem. I'm in no rush. I mean, so if you have questions, please ask. If not, then so be it. You know what? I got to put up my email too for you guys.
I might shoot you a question on Facebook or something. I'm actually about to go into a house, so.
Yeah. So, let's see here. Shit. Next time I gotta learn how to use. I was so unprepared today, guys. I'm so sorry. My dog was running in the street, got its rear end hit by a car. I'm running in here, getting this thing together. The whiteboard wasn't on. Next week, everything will be prepared. It'll be nice and fluctuating. This is the first week this has ever happened out of 6 months of doing this. And I do these every single week. This is twice a week. This goes down. I will let you guys know when the next one is. I need your email addresses sent to me, and I need them done via text too, because I check my text messages. I'm different than most people. I check my texts more than I check my emails. I think that's all in caps. I'm sorry. My wife never, ever uses anything but caps locks. The woman types with one finger still. That's the cell. And if you guys can get me over your information, I can easily make sure that you guys have all the details that you'll need from the other webinars and stuff like that. So look, let's go have a powerful, strong week. Find the numbers. Remember, I have things to give to you guys. Once you climb on board with me, you get the things that I need. If you want any more personal coaching, there is a system that hires me personal one-on-one coaching, just personal coaching that we can discuss the finances involved in that too. But for now, just stick to these webinars if you don't have the money to be able to afford me one-on-one. And if you do, it's even more powerful to get me to come to you, fly into your agency, get your agency taught, spend a boot camp weekend, and watch your numbers just flourish, absolutely flourish when I'm done. So take advantage of this stuff and use what I give you, for free too. But if anybody needs me for coaching their agencies, please I'll be more than happy to fly in and spend the weekend and double, triple, quadruple, whatever. Your numbers will go up. I promise you. The facts are here. We can get proof. We can get social proof for you. So that's all I have for everybody this week. I will see you next week. Probably it's either going to be 9, it's either going to be 10. So everybody have a great weekend. I will let everybody know if they email me or text me their email for the next webinar, and based upon how to make mortgage protection sales. And I'm going to slow it down this time. We're going to pick it apart a little more, okay? Please have your questions prepared for me next time, okay? I love you all. Have a great week. Go protect some families, and I'll see you next week. Thank you. Thank you, NKY. Hopefully see more of you.